Welcome back, everyone. This is an update on the oil market. WTI prices headed lower in the previous days and continued the downward trend enacted in September so far. The commodities price action had been limited during August, and traders may have chosen to close their buying positions, locking in profits. Through this report, we aim to identify and briefly explain the most dominant headlines relating to and driving the oil market at the moment. We make a start with the US oil market readings released in the past days, as they could signal clues for the current and future price action for WTI. Last Friday, the US Baker Hughes oil rig count indicated active oil rigs had risen by 1, implying not much difference from the previous week's reduction of 3. On Wednesday, the American Petroleum Institute released its first weekly surplus of plus 2.97 million barrels after 6 weeks of consecutive drawdowns. Even though WTI's price had already slumped in the past days, last night's reading tends to further support the downward trend in September. Yet overall WTI moved higher yesterday, making back some of the previous day's losses. Furthermore, the Energy Information Administration's crude oil inventory's weekly reading will be released today, the 10th of September, in the US session, and traders should be aware of the event, as it could create volatility for oil prices. On a separate note, reports by Reuters stated that the latest drop in oil prices could also be attributed to some decision made by important nations within the OPEC group. More specifically, Saudi Arabia's Aramco, in the past days, announced it is to cut the October official selling price for its oil. Some consider the move as an indication of softening demand. Yet, large producers could also be thinking of maintaining their market share, which is crucial for the long-term economic longevity. Moreover, the cut in price may be an action to counter the seasonal drop in American oil consumption with the end of the summer period. Saudi Arabia is regarded by many oil market participants as the controller of the oil market prices. The large oil wells and production capacity that the Saudis keep allow it to produce at very cheap levels, thus giving it a significant advantage over other global producers. In the US, the oil market continues to suffer substantially, with many oil producers being in a desperate position for the past months. It is estimated that some US producers are doing business with very low prices, finding it very difficult to cover for expenses. The lower oil demand is now also being felt in Europe, with diesel refineries finding it difficult to continue their operations due to reduced business flow. As a final note, the oil market continues to display sensitivity towards the coronavirus outbreak persisting globally, especially in countries like India, some states in the US, and some European countries where cases have increased. Oil demand is kept lower. Lower demand, however, could be reversed, as according to Reuters, Chinese WTI imports may continue to surge in the following months, as was the case in the past 4. These were the fundamentals for the commodity. Please stay tuned for the technical analysis. Welcome back to our technical analysis. This is WTI daily chart. Now please note the commodity was in a continuous selling momentum for 5 consecutive sessions from the 2nd to the 8th of September, and this has not been seen since the previous April. With its latest drop, WTI has fallen to test our S1 37 support level, but bounced right off it and rose above 37.50 for the time being. Other levels we have noted in the case of a continuous drop in the commodities price are the S2 35.50 line and lower the S3 33.50 hurdle. In case of a rise in WTI's price, similar to the activity observed yesterday, the R1 39.50 resistance level could be the first to come into play. Even higher, we have also noted activity nearby the R2 41.50 line that traders may consider a stop point. The R3 43.50 level is also a possibility if the bulls are to dominate once again. The RSI indicator seems to have rebounded above the 30 line with yesterday's upward movement, and today's EIA weekly reading could determine the further direction for the commodities price action. That's the end of this report. We hope you enjoyed it as well as found it useful. Thank you very much for your time and enjoy solid trading.